Coming hot on the heels of a week that saw not only four of the Mag 7 names report, but also announcements from Chinese firm DeepSeek and Alibaba to say that they have indeed beaten the likes of OpenAI with their large language models and doing so on a much cheaper budget. There's been major volatility in the week just gone, but that tech theme will continue as we move into a new week. And we're going to be focusing on the likes of Amazon, Alphabet, and Palantir in a week that has a whole raft of big tech names reporting. So let's jump into it. First and foremost, this is the outlook for the week in terms of some of the big names that will be going to be reporting. Top of the pack is Amazon, valued at around 2.5 trillion. Then we're looking at the likes of Alphabet, Eli Lilly, Merck, PepsiCo, Walt Disney, AMD, Qualcomm, Palantir, ARM Holdings. So, if you're looking at that, you're looking at AMD, Qualcomm, Palantir, ARM. So there's a significant amount of big tech names reporting aside from Mag 7 names. Of course, last week we saw 4 Mag 7 names. This week we're seeing 2 in the form of Amazon and Alphabet. And we're seeing things calm down a little bit. Certainly there's been massive fear around this shift in terms of the power within the AI sphere towards China. They can seemingly do as well, if not better, with a much smaller budget. What's this going to mean in terms of US AI infrastructure and the ability to lead the way, as had been presumed because of the huge amount of money that has been invested? There's a number of different things to really sort of look into on this front. I mean, first and foremost, the claims that come from the Chinese over the idea that they've done so on this really tight shoestring budget, they're probably not entirely correct, but it is probably likely that they have a significant amount less than some of these major competitors over in the US. So what does that mean? Does that mean that these firms have been wasting money on these very expensive chips that they didn't necessarily need to get? Perhaps not. And in actual fact, I'm sure a lot can be learned from the different announcements that have come out from the likes of DeepSeek, and those kind of improvements can actually probably be implemented elsewhere to be able to make things more affordable. And that is a benefit for businesses as a whole. There's going to be some companies that will suffer. Certainly, if you're talking about businesses that pride themselves on being able to charge huge amounts and everyone thinking they need the absolute latest chip like NVIDIA, you can see why there's question marks coming into play here, because perhaps some people would, or some companies would need to see sort of the latest chip, but it appears to be the case that you can probably do more with less than people had been predicting previously. Nonetheless, we're talking about possible benefits across the board. And also, we're at a point in time where people have seen their investments spending huge amounts of money on these chips and development and not necessarily seeing a huge amount back yet. And so at that point, the ability to either come out with the goods in terms of a massive rise in terms of profitability off the back of this investment in AI, or else drive down the amount that you're spending, one or the other would be ideal. You don't want to keep spending lots of money and not necessarily getting much back in return for it. In terms of the 3 that we're looking at today, it actually kicks off on Monday. Generally, Mondays are relatively quiet, but this time we've got Palantir coming into play. And this is a really interesting company indeed. They've been absolutely rampant with their growth of late. And you can see that here in terms of the numbers, the earnings per share over the course of recent years, going from 2022, where we had earnings per share of 6 cents, up to 25 cents in 2023. And then you're looking at 38, 47, 57. So growing at a very rapid clip. Revenues also expected to move sharply higher. And this is a company that is priding itself on being the sort of gatekeeper for implementing AI across different businesses across the world, across military. And so, there's, of course, those big tech companies that they've got the expertise, they've got the money to be able to invest huge amounts and do it for themselves. But there's going to be a lot of businesses that need someone to help them do it. And Palantir pride themselves in the ability to do exactly that and come up with incredible solutions that have the kind of end product for the consumer or customer that means that you're essentially going to be a customer for life. In terms of the quarterly numbers, you can see the past 5 quarters have seen outperformance. So you've got a backdrop of outperformance over the past year and a bit. This time around, we're expecting 11 cents on the EPS. That's higher than the prior month. And pretty much every single month goes up and up and up, right? So it's not necessarily the same kind of cyclical business that you might see across many of the industries out there. In terms of revenues, a similar kind of picture, right? We're just gradually picking up steam, presumably as their customers take on additional contracts, or they increase the value of their contracts on renewal, or they take on new customers. But all in all, you're looking at a company that really thus far has shown itself to be really well positioned in a part of the business landscape that is exactly where people want to be, because this is going to revolutionize the way that the world does business. The major question mark people have is around valuations, because as is often the case when you're growing at an incredible pace, people get a little bit carried away with themselves, and you start seeing these companies valued really highly, and the expectation is of such high growth that it's quite difficult to actually keep up with that. In terms of the share price, let's just show you exactly that incredible run up that we've been seeing thus far. This is the weekly chart, so let's look at it on full screen. So this is the weekly time frame, right? So you can see, over the sort of wider, longer time frame, so 21, 22, 23, not necessarily too inspiring, but we really sort of picked up pace, notably at the back end of last year, and we saw this absolutely rampant rise in Q4 of 2024. Now we're in a position where we've seen this significant pullback at the beginning of this year. So, of course, we saw this big, strong run up around the US election. And then we've seen this big pullback as markets started to ask questions. Quite frankly, if you're looking at, say, the US 500, so if we're looking at the S&P, you're seeing it replicate that S&P move, right? So this pullback that we're seeing here at the beginning of the year is not necessarily something that is a Palantir issue. It is just wider market sentiment. And when you've got businesses like this that have seen such high valuations in play, you're going to see some profit taking. But we're approaching another event where they can justify their high valuations. Let's look at what happened on the previous earnings report. So we can see here in November, big gap higher. And that was after a period of consolidation, gap higher, and just ran away. So that kind of runaway gap, really bullish and really useful after a period of consolidation or a basing pattern. Then we can see here, we sort of saw a pullback again into earnings and then gap higher and pushed higher from there. So this is a running theme of late, that we've seen this gap higher and a move on from there. We're not necessarily seeing it close the gap. You can see on this occasion, we did see an initial move higher and then a gap lower. So we sort of saw this island, and then we just continued to consolidate. On this occasion, we saw the gap higher and a move away from here. Gap higher, move away. We did pull back a little bit in time. But that seems to be the theme. It's outperformance in terms of earnings, the gap higher on announcement, and then we see the stock just continue to move in that direction. We're not necessarily seeing it pulling back, sort of closing the gap and things like that. So people clearly are very bullish for this stock. Over the near term, how are things shaping up? We've seen this sort of ABC style retracement. We've now rallied up through that first swing high, which is here at sort of 80. And so we've seen a bit of a pullback again with sort of that DeepSeek news. We've regained it pretty swiftly. And that low is likely to be utilized as a key level to be following from here onwards. So 72.67. If we break below that level, then yes, maybe it doesn't look as hunky-dory. But at the moment, we've got a very bullish wider trend. We've got a company that outperforms time and time again in terms of its earnings. I don't expect anything different. And bear in mind, when we're talking about question marks over the AI story, for one thing, that's only just come out now. So the idea that anyone's going to pivot away from the way that they're spending or that they're sort of thinking at this earnings report, it just doesn't make sense. And add to that the fact that this company does well on implementing, right? And so if it can implement more cheaply but charge customers a high price because of the end result they're providing, then that's even better for Palantir. So I think they actually stand to benefit from the kind of news that we've heard this week that is likely to provide greater price competition in the AI space between the likes of China and the US. And if the Chinese are good for one thing in particular, it is being very price competitive. Tesla have seen it, and people have managed to benefit from that because they've had to keep cutting their costs. So the US tech companies are going to have to move in a similar kind of direction. Next up, let's look at Alphabet. Alphabet, of course, one of those big tech companies that you would expect to be hit hard when you're seeing talk of these Chinese competitors, in particular because one of those companies that would have spent a lot of money on it. You're talking about sort of ad revenues for this business being a key element of the business going forward. And certainly, you know, we're talking about a huge company with a whole raft of products. There's been question marks around whether OpenAI is essentially going to take over from Google search. Why do you need to Google something when you can just go onto ChatGPT and just get the answer immediately, although it may not be immediately correct? Like I said, advertising key to it, and ad spending generally goes hand in hand with the business cycle. So as things are picking up, you know, perhaps that's going to benefit them generally on that side. Like I said, we've also got the sort of cloud business as well. So a raft of key elements to be looking out for. And certainly when it comes to cloud business, that's something that, you know, hasn't necessarily performed that well when you look at the Azure product from Microsoft. So it's going to be significant question marks about how things are playing out here for Alphabet. So in terms of the year-on-year metrics, you can see there's an expectation that we really see earnings per share ramping up this year. 802 from 580. That is a significant push away from 2023. Now, but of course, this is the fourth quarter, so we have seen much of that thus far. And so if you look on the quarterly basis, you can see that much of that strength has come over recent quarters, where you're seeing that really big outperformance over the last 7 quarters, I believe it is here. So you're looking here for another quarter of outperformance, which would make 2 years worth of quarterly beats for the earnings per share metrics. Similar kind of thing in terms of revenue. So this business has done well time and time again. And are we going to see the same thing this time around? First and foremost, let's look at exactly how this stock has reacted to those previous announcements. So again, let's go full screen here. So Alphabet here on the daily time frame. What have we seen on previous earnings? So here we go. We've got one here. We saw the gap higher, the gap higher, that initial push. Then we see closing the gap, and that ultimately resolved towards the upside. On this occasion, we saw it gap lower and continue towards the downside. We gapped higher here, closed part of the gap and moved onwards from there. On this occasion, we gapped lower and closed the gap. So that appears to be a lot more common on this occasion. You're talking about a company that, you know, even if we do see an initial move in one direction, there's a good chance it's then going to retrace into that previous level, or at least retrace some of it. So that's worthwhile noting. If you're talking about a sort of runaway move, if you think that it's overextended, it does have previous for pretty significant pullbacks, even if it then resolves in the direction of the trend as you come into it. Looking at how price action has shaken up over the course of this week, you can see here we saw that gap lower, regained pretty much all of that, much like Palantir. And you can see in terms of recent price action, generally we're sort of trading within this rising wedge formation, as you see here, with higher lows and generally sort of flatlining tops. So this 201 level is going to be really key here as we look to exit that. The trend, of course, is a bullish one, and we're within a bullish trend, right? Because flatlining highs, higher lows generally would exit towards the upside, but I'll be waiting for a closed candle above that 201 level to give us greater confidence that we're going to then push onwards and upwards from there. And if we're looking for a potential projection from that, of course, you have that measured move where it would be you measure the size of the wedge, which is sort of 1649. So let's say 1649. That points towards a potential move up to around about 218 on the exit, which would likely sort of replicate this initial move coming into it, into the exit as well. So just one way of looking at it. Of course, people struggle with targets, and ultimately there's different ways of looking at the way that you enter and exit trades. But certainly with this rising wedge formation, it's going to be a really interesting one. The previous does show that we do see gaps, but generally that gap does retrace. So if we were to gap higher, there's a good chance we could ultimately end up retracing back into this 201 level before we move higher once again. But that's, of course, if we do manage to see a beat. And generally, if you look at the performance of the companies that have beat so far in terms of the Mag 7 names over the past week, generally those beats haven't seen huge upside in terms of the stock. In fact, we've seen significant weakness for Microsoft when we saw a little bit of disappointment. We saw bit of strength off the back of Tesla after original declines when they underperformed, but then people were sort of focusing on their outlook. And you saw the major declines coming from Nvidia. So, at the moment, it's quite difficult. It feels like if they're to beat or match expectations, you might get a bit of a gain. But if we saw them underperform, it really feels like markets are quite jittery at the moment. And we could see them start to move towards the downside in a meaningful manner if that were to come to fruition. And finally, we've got Amazon, of course, this absolutely massive retail giant, but also a giant when it comes to cloud services. How have people determined Amazon to be impacted by the likes of the DeepSeek news? Well, in terms of price action, we didn't really see a huge amount of downside, quite frankly, because it was almost immediately bought up and the stock then rallied into fresh highs. So we're talking about a company that people are by and large perceiving to be a benefactor of this news. Apple was the same. Apple did not sell off this week. It just kept climbing higher and higher. And, that really points towards who people think are going to benefit and who people think are going to lose out from this. And I would say there's more companies that will benefit from this news coming out of China than companies that it would be detrimental to. In terms of their performance and outlook, we can see here that they have generally outperformed on an annual basis. But the key thing here is look at that EPS number. 290 expected to go to 515 this year, then 626, 773, 937. Again, a transformative year when it comes to 2024. Is that going to create the backbone for really strong outperformance in the years to come? Time will tell. And certainly when it comes to the quarterly metrics, you can see here 148. The expectation is that that's still going to come in stronger than Q3, and certainly comparing to $1 last year, heavily up from there. If you look at the performance versus expectations, this is a key one. Look at the outperformance over the course of 2023 and 2024. So the last 7 quarters. Not only are they outperforming on the EPS number, they're heavily outperforming because you're talking about 25%, 21%, 16%, 25, 60, 83, 45. We're not talking about single cent moves here. We're talking about big outperformance. We're talking about expecting 103 and ended up getting 126. We're talking about expecting 59 and ended up getting 94. So this is a company that has been going from strength to strength. And there's a hope that they will continue to do exactly that. In terms of the share price, like I said, the market's been essentially deciding that this is all good news for them this week. And no one wants to be out of this stock. So the weekly time frame shows you this rampant rise over the course of the past 2 years in line with that strength in terms of earnings per share. It comes off the back of all of those sort of original jitters that we saw with COVID turning into the massive surge in terms of inflation and the cost of living crisis and alike. But certainly the bulls are well and truly in charge as things stand at the moment. Let's look at how things have played out over previous earnings reports. So we came into it with a gap lower and then we gapped higher and pushed onwards. You can see here we gapped lower and then we gradually regained that ground and pushed higher. So similar kind of story there. You can see on this occasion we sort of saw some jitters, a bit of a move lower, and then we recovered. We did gap higher here and push onwards and upwards from there. But interestingly, despite some of this outperformance, it feels like for this stock, generally markets appear to, number one, get jitters. So we do see volatility. You might see a significant gap lower. But that gap lower, if that does come to fruition, generally is bought up. So be aware of that. If they see major outperformance, but you see a bit of weakness on the AWS number or something like that, you're likely to see weakness in terms of the stock. Despite, if you see a big outperformance in terms of the earnings per share figure, if you do see weakness on something like that, which is what we've seen in the past, question marks around, say, the cloud services, you're likely to see weakness in terms of the stock. But generally, if we look in the past, they're always bought up and it offers an opportunity for traders and investors alike. In terms of the near-term price action, you can see this sort of stepped move lower. Here we go, sort of 1, 2, 3, 4, 5, and then we continue on that upward vein. The break through the prior high then gives you that bull signal, move higher, consolidation, move higher. Now we're retracing. I think there's a good chance that the bulls come back into play as we lead into this earnings report. But like I said, there is a caveat to say that previous examples have shown the company outperform very heavily, in particular on the earnings per share metrics. The stock moves lower, but then generally it recovers. So are we going to see that once again? Potentially. That's my three to watch over the course of next week for earnings season. Really, it's in full force at the moment. And, there's going to be big moves for the week to come. I've also provided a week ahead video that's going to be covering the likes of the Bank of England interest rate decision, the US jobs report, and the inflation data coming out of the Eurozone. I hope this has been useful for you guys. Like, subscribe, and follow. And thanks a lot for checking out our content. My name's Josh Mahony, Chief Market Analyst at Scope Markets.